Good morning, Doug. Welcome to another Friday morning.
Good morning. I walked in today.
Where did you walk from?
I walked in from the Midas. Well, it used to be Midas Mufflers. I don't know, like maybe it's Midas everything.
Yes.
Complete car care.
Yes.
And so oil change in the big van, tires rotation. I mean, this is maintenance. It's what you do.
I was thinking about tires. I'm buying a set tomorrow. I think the number is going to be $1,000, which is just old school thinking because, I could get a candy bar as a kid for a dime. So I lose the idea that tires and other things are affected by inflation as well.
And I'm guessing these aren't like some like super high performance tires. These
No.
are like some kind of like normal
These
tires.
are for my son's car, right?
Okay.
Yeah. So
Yeah.
these are not gonna cause you to go around the racetrack.
Well, you and I, we were talking. I'm going to pick a scab now.
Oh, thanks.
We were talking transmissions the other day.
Yeah.
Speaking of cars, and Keith and I have both replaced a transmission in a car in the last couple of years, and these maintenance type things, they're okay expenditures. These happen, and they keep us rolling down the road. So these types of expenses probably shouldn't surprise us. Not that they're fun. Tires, transmission, what else? I mean, just stuff. But it's worth having some extra money lying around for them.
Well, you were also picking scabs about the amount of these not unpredictable things that have happened in my life here in the last, since the beginning of the year. But I am going to draft an article for the Anchor later probably the next couple months, just talking about what an emergency fund is, because I had my first real emergency, something I hadn't really anticipated with the replacement of our sewer line here, which I probably could have anticipated it. It just wasn't. But like tires or really a roof isn't really an unexpected thing. And so we'll see how I come up with that article, but that's just really thought provoking. And those unpredictable things, though, if you see our disclaimer up there that snowshoes are recommended for some parts of California. So what do you think about that?
Well, I do think one of the great things about like the Midas is, I don't know who owns the Midas, but we have friends who own businesses like the Midas.
Yeah. And
it kind of makes me happy to be doing business with the local people down the street. And so I'm grateful for entrepreneurs and the mechanics that were working in there today. They had 2 mechanics, and I bet it's really hard to find a good mechanic today. And so I'm grateful. I mean, don't get me wrong. I'd rather have the money in the pocket, but I'm grateful that there are businesses out there to help us along the way. So
my late friend Jeff Auto Repair was down at 96 in college, and when I didn't have 2 coins to rub together, he kept my cars on the road. And I think a mechanic is really, if I was going to tell a young couple, I'd say a good mechanic is probably a good part of a financial plan. And what Jeff helped me do, which is kind of counterintuitive to those young folks, is he would help me spend maybe more money keeping my car on the road than the car was worth, which everybody goes, that's foolish. But if I could spend that money and get a couple of years out of it, that's a lot better than car payment for 4 or 5 years.
Oh yeah, no doubt. Plus it allows you to do what's important. What's important to you might be having some adventures, and an old car will allow you to have a lot of adventures.
It's got some stories. I was talking to our friend Jim Pinkston this week, and Jim said, he goes, now the first time I talked to you when you're a financial advisor, Keith, I seemed like I was riding in your car and your car had a hole in the floorboard. I go, yeah, my pants used to get wet. I'd be trying to impress people that I knew what I was doing, and my pant leg would be wet because it was a rainy day like today. But that's what you have to do, what you have to do, right?
What you gotta do.
Yeah.
That's funny.
That is living large right there, fans. It is a good time. What do you got on your mind today?
Well, I think one of the topics that I was thinking about last week that we really didn't spend much time on is this idea of diversification.
Okay.
And so, when I first got into the investment business, every mutual fund rep who would come see me would talk to me about diversification. And by diversification, they would hand me, I should go get it real quick.
Well, when you do that, and I was say, Doug introduced me while he's chasing this down. When he started working with me, he introduced me to the idea, don't be sore, buy some more. And I'll just share, this is a popular fund out here that people have bought in the last few years, and it went, and we're not recommending it, no recommendation here, but it went from the low of the pandemic from $33 a share all the way to $160 a share. And here we are, and you can buy it today for almost just less than $40 a share. And looking at the chart, it says it is going nowhere fast right now.
Yeah.
And so I'm not endorsing them. I'm not saying negative things about them. I'm just saying that the world changes. And if you stay the same when the world's changing, you might get left behind.
Yeah, I think that's important just to reference is hey, the fund is what it is. It's prices.
Yeah,
you just have to follow the prices. But here's this chart I had to go get at my desk, and this is, I don't know who sent me this. Oh, this is Catalyst. We're not even endorsing Catalyst, but thank you, Catalyst, for sending me this. Here it is.
They actually sent me a nice little mug too. So you got that, and I got the mug.
I can't even remember the last time we used a Catalyst fund, but thank you. And so sorry, Keith, I'm putting this in front of your face.
Let me put it in further.
So, okay, so I love this chart. Do you like this chart?
It looks like an ice cream bar to me.
I think that's the reason I like it. I like color. But anyway, what this is, the history of asset classes. Maybe you've seen this. And this tells you that on any given year, has 2003 to 2022, it shows you which asset class performed the best. And so last year, commodities performed the best. They were up 16.09%. REITs performed the worst. They were down 25. Let's see, US stocks down 11. Okay, here's a kind of wild one. US bonds down 13. And so every mutual fund rep would come visit me when I was younger, and they would say, Doug, you have to have your clients' assets spread out amongst all this stuff because you don't know what's going to happen. And so you want to have your portfolio balanced. And, I'd do one of these, okay, yes, sir. And then I'd go do that. I would have this collage, like this beautiful picture here of 25 different mutual funds or whatever. And maybe you've done that too. I don't know. But the idea of diversification, maybe it's not good. Maybe it's good to hone in on just a couple performers, and you have a safe basket, you have a growth basket. And so these are the things that Keith and I talk about all the time is, well, how do you know what's good? Well, here's how you know. You look at price and you see how the price is doing. Is the price moving above its 200-day moving average? Is it moving below? Sometimes they all just move sideways and there's nothing really going on. But there's clearly winners and losers. And we'd love to be in the winners all the time. We know we can't. But we also know now that we don't have to be in the losers all the time either. And so there's a time to say goodbye. And unfortunately, when you have all of these, what you end up doing is you diversify your portfolio instead of truly diversify it towards the winners. So that's what I was thinking.
Let me take a look at that real quick. But you picked another scab because I was just like you, and it was. I called it the St. Valentine's Day Massacre. I went to dinner with a salesperson and he told me about this great asset class. So I thought it was the greatest thing since sliced bread for my clients. And as soon as I bought it, it started kind of inching its way down. And I think by the time I finally got out, it was half the value of what we got into it. And it was just out of ignorance that I got sucked into that. And as a young, I wasn't even married, because I went to dinner with this guy on Valentine's Day, so I might not even been dating any. It was a long time ago, but I just thought, what did I do? Because if there's no way to get, if you just think buy because it's got a good story, or everybody says it's a good thing, you don't have an exit plan, you may find yourself in one of those St. Valentine's massacres. But I noticed that there was an asset class on here that led the way many times back in the early 2000s. It was kind of this purple one, and it's been down towards the bottom here lately, and it's been kind of sending some yellow beacons to pay attention to me lately. And I'm like, can we get that for our clients? Because it's such an unusual place to put money. And yet the place that most people have been most comfortable have been those FANG stocks for a long time. And they've been the ones that have been up in the top of this chart for a long time. And maybe they're not going to be the ones that lead in the next decade. I don't know, but to get locked in that I have to do the same thing that I've always been doing can sure put you in a tight spot if you're not open-minded.
And heads up, if you have a retirement account, very popular these days are the age target funds, and that's okay. You know, they're okay. Your assets are diversified, but know what's in them. And so, you know, they might not be as diversified as you want them to be, or as diversified towards your goals. If you're an all growth person and you've got one of those target funds, and it might have 40% bonds in it. Maybe you don't even know that. So it's good to look under the hood and see what you own.
I would say those encourage an attitude of complacency more than anything. And maybe that's the right thing. I don't know. I think there's an old saying, know well the condition of your flocks, and complacency kind of contradicts that. So anyway, if you have something like that and you want somebody to set some eyes on it, we'd be happy to encourage you with that and help you think through where you're at on those ideas.
And I really am grateful for the Catalyst folks sending me that chart. I do. I love to review every year and see what won, what didn't win. But it's also that, again, that reminder that you don't have to own all that stuff.
No, the life out there is you're gonna. Well, we had talked about our friend Mark Minervini. We haven't had personal conversations, but I think he's influenced us enough that we can call him a friend. And in a bear market, he says his success rate, and he's one of the probably the greatest investors of our lifetime. His success rate in a bear market is he's only right 30% of the time in his decision process of which things to own. And we're in a bear market, make no mistake. Let me show you this is the NASDAQ, and our friend Patrick Walker says if you throw the chart down on the ground and look at it and see which direction it's going, it tells you whether you're in a bull or a bear market. And I think if you look at this NASDAQ here and you just connect a few dots there, that it says we are still in a bear market. You know, if we connect these dots right here, that trend is not upward. And if I go back before where we're at right here and I connect these dots, you could say maybe we're coming out of this like deeper slope into something higher, but definitely this market is looking to find its home and hoping to turn the corner, but we don't know yet. That's
switch the date up there to like 2015. Just so we can all remember, this is what we want to see. And I had to pull this date up for me personally earlier in the week because it's been so long since we've seen anything like this. Well, it sure does feel long anyway. And I wanted to take a look for myself and just see what does an uptrend look like. And I've been doing this since 1998. I know what an uptrend looks like. But it's good to go back in time and be reminded that, hey, this will pass and we don't have to hope it works out or put all of our stuff in and just hope for a better outcome. No, we can patience. We can execute patience and wait. So that's what we're looking for. And when that comes, that'd be great. Can't wait to talk to you about it.
Well, and I think we've said it a number of times, it's a lot more encouraging above this 200-day moving average for our first-time viewers. This line right here is the 200-day average. That is a mathematical computation of about this much time These lines, vertical lines here, are 1 day activity in the market, and the 200-day just smooths that out to say which direction is this thing going. And it's just a lot easier for us as investors mentally and really financially to hold off to get too excited till we're above that. Shall we look at where we're at today? You want to talk about that real quick, Doug?
NASDAQ's trying to punch through, isn't it?
Well, I read, let me find in my notes today.
I actually really like the way this is set up.
Well, it looks good. I was reading today that since 1945, February, I use the R after the B. I don't know about you, but is the second worst performing month in terms of average monthly returns. And it kind of added to that this year. February was not a very good month in the market. However,
high March.
Yeah, let's cheer on March. March is a good one, but look at this thing. Here's the 200-day moving average. This is the NASDAQ. You can't invest directly in the NASDAQ, but this gives you an idea of what's going on with those tech stocks.
Shift that over to S&P real quick. Let's take a look and see what's going on there.
Oh, that's not the right one. Sorry, fans. There we go.
Yeah, kind of some of the same. Looks like the NASDAQ has been a little stronger here in the last few days, but again, just fighting for position above that 200-day, and the S&P fighting around the 50. It's not bad. It's not great, but it's not bad.
Yeah, I mean, I've found as a younger advisor, younger investor, that my will is irrelevant to the market. What I will for this thing to do doesn't really matter. My desire doesn't really matter. And it would really even affect my emotions, because I would think I could somehow will this to do what I want it to do, rather than say, this is what it is doing. Let's act accordingly. And it looks like to me, we've talked about the NASDAQ, I think is more clear on this. It looks like to me that when this thing dropped below the 200-day moving average right here a year ago, that when it rallied back up, it hit it right there and bounced off of it like the bottom of a trampoline. It set a new low right here, rallied back up, hit that thing like the bottom of a trampoline and bounced off, did it again right here. And then right here at the first of the year, it looks like it's trying to stay above it. What do you think?
Yeah, I think that's what it's trying to do. And I think there are several stocks that are trying to emerge as the leaders. And that's what's really unknown right now is all of the stocks that make up these indices. How are they behaving? How are the leaders of these indices behaving? And that's the big question that, I don't know.
Yeah.
Except wait and see.
Well, my goal, my desire, if I look out here a couple of weeks from now, is that I'd like to see this 200-day flatten out right here, if not turn up a little bit. And I'd like to just see these stocks kind of hover around here and try to get some grip and start going upward. And then if they could eventually break above on the S&P, this trend line in the days ahead, get up around the 4,100 level or something and just keep going above, that would sure give me a lot more encouragement on this market. And it's getting this week was getting kind of discouraging, because it looked like it was wanting to drop below this and kind of continue this downtrend. But I think the thing that investors probably need to keep in mind is that the news is kind of the rear view mirror. The stock market leads the economy. And if we've said that once, we'll probably say it 100 times. And so the news is just going to talk about the economy. The stock market is projecting what it thinks the market is going to do. It's not waiting on the economy to tell it what it's going to do. It's looking forward and making decisions based on all the variables coming towards it.
Yeah, and I think what these indices would like to see is that they would like to see some type of pause in interest rates. Probably love to see a cut. That's not happening. But some type of pause could be really beneficial for business. And if that happens, we could be cruising into a better summer in 2023.
Boy, that's I started I listened to Brian Westbury to get my kind of general market economic perspective, and a lot of people have accused Westbury of being a perma bull, but if you're watching him now, he is not a perma bull. Perma bull meaning he's always optimistic, and
that's been true since I've been around with First Trust and Brian Westbury. He has been very optimistic, but here lately, in the last year, maybe he's turned the dial down.
And
That's okay. It's kind of what it is.
Yeah, I mean, there are things going on that have not ever happened before in our lifetime. So they cause you to ponder it and consider what's going on. I've been following a different economist as well, Jeremy J. Siegel, and his latest commentary said the latest PCE data spooked the markets, which I am traveling internationally this year. And one of the things I don't like about that idea is I like to understand what people are talking about. And so when I got his newsletter, he did something really interesting here is he, on the back of his newsletter, has a glossary of all the terms in his thing. So you can understand what he's talking about. And PCE is Personal Consumption Expenditure Price Index, in case you didn't know it. And it's a measure of prices that people living in the United States or those buying on their behalf pay for goods and services. The core PCE price index measures the prices paid by consumers for goods and services without the volatility caused by movements in food and energy prices to reveal the underlying inflation trends. Well, I thought that I basically said he used that term in 2 words, but I didn't know what the term meant, and basically said the PCE inflation index takes some of the more volatile components of inflation out of it, just to say the normal things you're buying, this is what they're doing. And he said basically the normal expenditures spook the market.
Yeah. Hey, can you grab that diversification chart again on your inbox?
Oh, yes.
I mean, one of the reasons why some of this PCE stuff has gotten expensive is, like I said, that the top performer last year was commodities.
Yeah.
And so like tires, eggs, just stuff, just the commodities that make up our world have gotten more expensive.
Well, and I would say even some of the demographics, I was talking to some folks about that this week, is that if you're living in one of those states that haven't managed their resources very well, they haven't been treating their taxpayers well, a lot of those people have been moving out to states that have done better at that. And what has happened is those states that those people were moving from, their real estate prices were higher. So those people were taking that capital in those real estates and going into places where the real estate prices weren't as high, buying or building new houses and putting all kinds of things in it. And so that capital that's moving from one state to another is attracting those workers, which would affect some of those inflationary prices on some of those sort of things. And so somebody was telling me even here in Carmel that a number of the houses have been bought by folks in Chicago, which is that exact same idea. If you're moving out of Chicago into Indianapolis, you would definitely get more bang for your buck. What about Bankrate.com? They came out this week with the top 5 most reasonable places to live. So where are those folks that might have been moving from to where they might move to? Where do you suppose? Give me your shot of one of those 5.
Top 5 places to move to.
And it's measured by the local wages, the tightness of the housing market, employment picture, and the wellness and the culture.
Yeah. Okay. Well, Carmel, Indiana is number 1.
There you go. Doug is not biased.
Followed closely behind. Our Muncie would be close behind. But no, I would say, let's see, is Austin, Texas on there? Let's see, what about, there's got to be is Tampa, Florida on there? I don't know, you tell me.
Did you steal my,
No, did I get one?
Austin was number 1.
Yeah.
Yeah. And if you're paying any attention, that's our friends in California are moving to Austin. Yeah. They may be moving over to Reno or Nevada as well. And Austin's number 1. Number 2, Kansas City, which I wouldn't have thought of that one, but it's kind of a cool city. Raleigh, North Carolina makes sense. That a lot of people are moving from New York City down into the North Carolina area. Minneapolis was one that surprised me.
Well, I knew that one would be on there because my friend Lance likes to remind me that his hometown did beat out Carmel in some U.S. News World Report thing. So I don't get it. I don't get it, but yes.
Hey, Lance, the whole when that whole they call them protests. We're not allowed
Let's
to
just talk about snow. There's a lot of snow up
there. When that all happened, it scared me a little bit about it. But I think Minneapolis is a really cool place. And then 5th, which wasn't Tampa, it was on the other side of the state, it was Jacksonville.
Okay.
All right,
Is Washington DC on there?
the 5 worst.
Okay, that's what I was like.
He's looking over my shoulder.
I was like, what?
The 5,
How did that make?
yeah, the 5 least reasonable places, and we've talked to our friend Deb about
I liked
Washington
all of
DC.
these places on
Yeah.
there. Like well, yeah, I've been to all of those. All of those worst ones are really fantastic, but it's
Who
fun
can live there?
to drive in, drive out, fly in, fly out.
I did that with one of these last year. Neb, our friend Neb Hayden, who came and did a client event for us, he was part of a ESPN history of one of the things Bear Bryant did that was remarkable, a cool cat. But he told us politically, he thinks one of the problems in the US federal political system is the cost of housing in the Washington, DC area. Washington, DC was the 50th. And it's because in the olden days, the politicians would come in, buy a house in DC. People on opposite sides of the aisle would be neighbors. They'd have to come home, talk to their kids, have to get along with each other and not be so uncivil as they are today, which makes a lot of sense to me, is that you're not going to be as abusive to a friend as you would to somebody you don't know. And so Washington, DC is 50th. Boston is number 49. I did a quick trip into there in October. We went in Sunday morning and got out before the crowd got in. New York City, 48. San Diego, who doesn't like San Diego, is 47.
It's just
Who can live there? Yeah. And then Riverside, California, which is just up the coast a little bit. But yeah, housing really is going to have an impact on your quality of life. And so, but what happens, these things are just cyclical. Like New York City it'll be very livable and affordable, and then they'll run it into the ground, and then people have to come back in. And who knows, Chicago, we saw the election this week. Chicago prices have been dropping, and it's been a difficult place because of crime, but who knows what might change here. What else is on your mind today, Doug?
that's all I have on my mind today. I think just a reminder is, if you haven't done your taxes yet, and if you're needing things, if you're waiting on stuff from us, by now give us a call, because something either was delayed or got sent somewhere or shouldn't have, I don't know. But we can track down your tax information if you're waiting on us. Give me a buzz.
Well, I just noticed it's been 43 years since the Miracle on Ice. And do you remember that game?
Yeah, as a matter of fact, I got to meet the goalie a couple years ago.
Very cool.
Pretty cool.
Well, where you go through seasons, and I've seen a couple, 2 or 3 of these seasons where people in our country get divided and they lose that patriotic kind of feel. They feel like nobody's for them. And it's really interesting how something as simple as a hockey game was kind of a uniting force. If you look at the history of that, we've had a lot of divisive things going on, and that was a big deal. And so I'd encourage you this week to be a unifier, a reconciler, and a messenger of peace wherever you go, because there's big opportunities, I think, in our culture, in our country, and even in our markets. So I'd encourage you to keep the faith this week.
On that note, do I have anything else? On that note, I was talking with one of our friends who's down in southern Florida, and I asked him, I said, does everyone there have a hurricane story? And he said, yeah, everybody has a hurricane story. Even if they were living in Indiana when the hurricane happened, they still have a hurricane story. Maybe they own property down there. But he said the rest of Florida and the US has moved on.
Yeah.
But that little pocket, everybody still has their story, and maybe the empathy is starting to wear off a little bit. But I think that's just another reason to stay focused also, just what's happening locally. And you could say, well, geographically, like, northeast, southwest, whatever, but probably just even boiling it down to your neighborhood. What's happening in your neighborhood? And spring is a great time to know what's happening in your neighborhood just by walking around.
I have a history of sitting in my driveway in my neighborhood, and that's how I get a feel for what's going on, because really the community you build is the world you're building, I think.
Yeah, that's the peace part that I can really relate to, is the neighborhood.
Well, you all have a great weekend, and get outside if you can, enjoy your neighbors, and call us if we can help you with anything.
Bye.